Hi everybody. We're here today with Scott and Craig. My name is Scott Irving and I'm from Carrick Property, and we're joined today by Craig Warwick, who's from SevenCapital. He's the Business Development Manager, and we're very excited today just to position an investment opportunity with you, which is based in the UK, in Bracknell. And I thought, from our side, just before we go into that, I just thought I would share some of the reasons why to invest into offshore property. Craig, I just want to know if you're handing the slides there, can you just switch on to the next slide? I'm only seeing the first one there.
Sure. There's a small delay, but I have.
There you go. Okay.
There we go.
So just to sort of highlight some of the, just in brief, just looking at the economic and political stability of the country within South Africa, and for those of you that are on the call that are not South African, obviously these still can apply. The currency exposure in terms of the volatility of the rand over, for example, a 20-year period, if you had to look at that, the tangible stable asset class, and then the opportunity in terms of leveraging the sort of loan to value on a property against the low cost of the finance versus the finance you have in this country, and then also just a look at long-term wealth generation as well. And really, I thought to sort of go straight into it with Craig, and what we're going to look at today is just sort of from an agenda perspective is we'll just unpack the UK market, the current growth stats, and some of the averages that are in the latest trends that are happening, and then also look specifically at Bracknell and why it's a good idea to invest into Bracknell, and look at some of the unique offerings in terms of under supply and demand within, and the growing population within Bracknell, and then look specifically at why Grand Exchange and what's unique and different about this, specifically looking at the district that it's sitting in, and then we'll go through a cash flow summary and looking at the actual investment case as well. And then more importantly as well, then this is one of the reasons we've partnered with SevenCapital, is obviously the developer's track record and looking at what they've brought to date. And as an example, we'll also discuss the small development that they did in Bracknell as an example to see a track history. But so yeah, and then we'll do a little Q&A. So thanks everybody for all of you that have joined. So to all the listeners, thank you very much for joining. You're welcome to ask questions as we go. Depending on, obviously we would love to have you asking some questions and being as interactive as possible, but from my side, you're welcome to put them in the chat room, and I'll try not to interrupt Craig too many times, but if any questions come up and I've got any questions, I'll certainly put them towards the end of his slide or for the next one. So without further ado, Craig, welcome and thank you. Over to you.
Scott, thank you very much. Yeah, thanks to everyone that's taken the time to join us this morning. Very excited to be talking to you, and obviously around our partnership with Carrick locally in SA. Yeah, so kicking off, we'll have a look at the UK property market update. In short, as you can see there, the prices remain very competitive in a global context. Looking at some independent studies and findings, there's an 8.8% increase in house prices over the last 12 months. And the source there's Halifax. That's coming out of COVID. As you'd imagine, you'd expect it to be quite compressed or flat, but there definitely is an increase, as you can see there, in high demand areas in the UK, which we'll touch on further down. 19% predicted property growth or price growth along the Commuter Belt over the next 5 years. Very important node and region in the UK. There's a lot of development, commercial growth, infrastructure upgrades taking place along the Commuter Belt. A lot of money being spent by government, and that's obviously one of the trends and indicators that we look for when we're looking at developing residential property in these areas. Average UK property price is currently sitting at around £260,000 on average. And then the last kind of point there to the right, 4,000 homes per year needed by 2030 to meet demand. That's probably one of the most important investment drivers and points to note. The fact that the UK has a well-documented massive housing shortage. They've almost deemed it a housing crisis, and it's compounding year on year, which puts investors and developers like ourselves in good stead as far as the investment case goes. There's a massive undersupply of stock and a huge demand in these important nodes across the UK. for prime properties like our developments. So currently, I'd say there's probably about 130,000 homes being built, and that's way under average, as you can see there. Looking at the latest trends, race for space over the last 18 months, tenants and the UK tenant profile have started reevaluating what they're looking for in their homes and what they want. A lot of people looking for extra bedroom or outdoor space. We're seeing a lot of that obviously being driven by coming out of the COVID pandemic and the work from home culture globally, but specifically in the UK, in these inner city areas and important nodes, there's a definite rise in demand for 2-bed apartments, 1-bed apartments still being the majority of the market, but there definitely is an increase coming through, a visible increase in the 2-bed space. Renting is the best option. For the first time since 2014, it's now cheaper to rent than it is to purchase. So we're seeing a massive amount of demand and growth in the rental demand versus first-time home buyers, and that's obviously driving the occupancy rates and the demand for these prime properties as well. Massive culture change. A recent poll found that about 65% of office workers wanted a split between home and office, again driving that 2-bed demand, and we've seen that increase month on month, literally at this stage.
Craig, just before you go on, if you don't mind me interrupting, you spoke about the rental being the best option as one of the latest trends, and I suppose what we determine are sort of like, so the terminology is around the rent generation. Why does that benefit the investors from this perspective, especially in the Bracknell consideration as well?
Yeah. So what's happening? I mean, historically, kind of our parents used to all tell us, and the same was in the UK, renting is wasted money. It's better to buy, etc., etc. That culture has completely changed, and specifically in the UK. You're working with young professionals, and these guys don't necessarily have the 40,000-50,000 pound deposit to get into the marketplace as a first-time buyer. So that's one of the drivers that's driving generation rent as a culture. In addition to that, they far prefer the young professionals coming through. They're looking more for the lifestyle elements than they are around owning property. So they'd rather have the ability to travel. They'd rather be in the inner city with all the nightlife and the amenities on offer, but they don't have that initial stepping stone deposit to get into the marketplace. The average first-time buyer in the UK at this stage sitting around 32 to 35 years old, and the majority of generation rent and the tenant pool is between 21 and about that age, 32. So you can imagine there's a massive demand in that professional sector.
Yeah, thank you.
No problem. Looking at Bracknell as an investment destination, if I can call it that. So why Bracknell? Couple of points here. World-class employers. Boris Johnson recently pinned Bracknell as the epicenter for free trade. There's 500,000 easily accessible jobs in the area across technology, financial, and engineering. Probably the most important factor here is that Bracknell is the epicenter of the tech cluster, or of the Silicon Valley for the UK. Essentially, that is the Silicon Valley in the UK. All of the big tech firms you'll see later in the presentation are headquartered in Bracknell, mostly for the UK specifically, but in some cases headquartered for the whole of Europe in Bracknell. So all of your big tech firms are there. That's the profile tenant that we're working with, and obviously that's a heavily reliant kind of sector at this stage, given the fact that we're all so reliant on the tech space and industry at the moment. Looking at connectivity, Unrivalled, nearest city, Reading, 22 minutes away on the rail. You've got Windsor close by. You've got London, Paddington, 50 minutes away. From a drive perspective as well, you've got accessibility to Heathrow within 23 minutes. And obviously London from a drive perspective, 60 minutes. Now that is going to be enhanced further with the rise of Crossrail, the new Crossrail system. That's a £20 billion rail infrastructure upgrade, linking as far to the left from Reading as your starting point into the heart of London, connectivity to London, major stops within minutes, and obviously connecting you to, along with Commuter Belt, to Heathrow as well, at Heathrow Airport. So that's a massive investment by government. And that's, as I said initially, one of the key drivers that we look for. What kind of money is being spent in these areas and why? Looking at the tenant demand, Bracknell is at this stage growing on average 2 times faster than the wider economy across the UK. It was originally built as a town for 25,000 residents. It's now home to over 120,000 residents. So you can see there's a massive amount of growth there, a massive amount of tenant opportunity for investors in the buy-to-let space.
I think, Craig, just looking at some of those figures is quite interesting. In the last year, just under 7,000 people have moved into Bracknell.
Yes.
That's a significant increase in just generally in infrastructure and services and impact on retail and obviously accommodation as well.
Correct. And on that point, Scott, I mean, you've got our development, the Grand Exchange, as part of the local council plans or regeneration plan in Bracknell. It is the only development that's been approved for the next 10 years that is open for investors and homeowners to purchase. Every other apartment is
that separates the Grand Exchange from anything else, because all of the others are who owns the other residential aspects within that area.
It would be held by the developer, so it's a rental scheme. They would hold all the stock and rent it out for income. So there's nothing for purchase, and there's no new developments, especially at this level, with these types of amenities and design elements.
Okay.
Yeah.
Quite a nice USP as well.
Exactly. So looking at a bit of the lay of the land, if I can call it that, just to point out, if you look at the 4th arrow pointing down, that's obviously the site for the Grand Exchange, the development we're speaking about. And then you can see around the commercial elements, GE, you've got Panasonic, Fujitsu, you've got Microsoft, all of the big tech firms, obviously in the Silicon Valley cluster. And then all of the big lifestyle elements, the Lexicon, the arrow just to the right of the Grand Exchange, that is probably a 2-minute walk from the development. That is a massive lifestyle development, £250 million that's gone up. And what that means, in addition to obviously all the commercial opportunity on the ground in Bracknell, is that you don't need to leave Bracknell anymore for the lifestyle elements as well. You've got everything on offer, all the major retailers, all the top end brands, and obviously all of the cafes and restaurants and pubs and all of those good things. So it just gives you a picture of what's going on commercially, as well as obviously from a lifestyle perspective around the Grand Exchange within the immediate catchment area. So looking at past and future, Bracknell property performance, average value of a house has risen by 249% over the last 2 decades. Bracknell's population, as we saw in previous slides, is growing rapidly, and it's set to rise by an additional, call it 18% over the next 20 years. A majority of that will take place, I would say, within the next kind of 10 years, in line with that regeneration plan that's taking place, a lot of the commercial development that's taking place within the next 10 years as well. Property prices forecasted to increase by around 18% by 2025. That's an independent study by JLL in the area. And what that says for an investor, just to somewhat translate it, is that they would be seeing really strong capital appreciation in the immediate future and around the corner within the next 5 years. And then Bracknell rental prices are set to increase as well, which obviously speaks into the investor's investment case from a rental and an income perspective. That's set to increase by about 8% over the next 5 years. So holistically looking at both, obviously, the 2 elements of the investment, the cap appreciation and the rental income, there's definitely a very strong investment case to be had in Bracknell right now.
Craig, and maybe it's a good time for us just to maybe sort of forward one of my questions I had for you, which was going to be when we were talking about your track record, but when we look at the yields that, from a conservative perspective that we traditionally position, from an investment case, one of the developments you did, which you've done in Bracknell itself, which was a slightly smaller development than the Grand Exchange, what were the sort of yields that we positioned versus what they're achieving now?
Yeah, so the smaller development was, as you say, in Bracknell, delivered it late last year, I'd say third quarter last year. coming out of COVID. And there were two important things that stood out for us, and it really cemented our case in terms of looking at areas like Bracknell. The first was that when we took it to market from a lettings perspective, we were able to pre-let over 75% of the stock within 2 weeks. We had never seen that sort of traction across all markets in the UK. It was phenomenal, and it's now fully let, so 100% occupancy rate, which is great. In addition to that, and answering your question, we positioned it with projected rental yields of 5%, which is conservative and realistic, and we managed to come in between 5.5% and 5.8%. So it came in above prediction, and that again speaks into the demand, the build quality, the quality of the product delivered, and the fact that you've got this young, dynamic, hungry tenant pool, and there's nothing on offer that is modern and speaking into that audience. So every one of our developments are tailored to a specific tenant profile in that specific area.
Yeah. Okay, great. That's a good offering to have. Thanks.
Looking at the commercial drivers in Bracknell. So as I said before, the most important factor or facet of Bracknell is the fact that it is the heart of the Silicon Valley for the UK. If you look to the right, all of your big tech brands, Hitachi, Dell, Oracle, Fujitsu, Microsoft, all headquartered in Bracknell, as I said, for the UK, and in some cases for the whole of Europe. It speaks into that audience and into that tenant profile. Around 86% of the population in employment, and nearly 50% of the population are in management or director roles. So these are senior tech professionals, highly paid guys. Important to point out, I think the current average salary across the UK per capita is around 28,000 to 30,000 pounds. In Bracknell, it's surpassing 45,000 pounds per capita average salary. So these are highly paid guys compared to the rest of the country. And what that means for an investor is you're dealing with guys that you should not see issues with in terms of their profile, managers, directors. And in addition to that, there's financial stability, being that it's a tech cluster, heavily reliant sector right now globally. So you shouldn't see any downturns commercially in that area. And these guys have the capacity to pay the rentals for a superior product, and they want a superior product. So yeah, it's kind of just a snapshot, but it gives you a sense of what's driving the market and who the profile tenant is in this audience. Looking at tenant demand and property prices, there might be a little bit of duplication here, but just to sum it up, as I said before, originally built for 25,000 residents, well surpassed that now, 120,000 residents currently in play, and that's set to grow by another 15% over the next, call it 10, 15 years, in line with that regeneration plan that's taking place. Apartments in the region have already seen prices rise by around 30% over the last 5 years, and that's set to increase again, as we saw before. And the average property price is currently sitting at around £380,000 in Bracknell, as we saw earlier.
Craig, I mean, that's quite a significant number over the average house price of the UK, which is sitting at around 260,000, if I recall correctly.
Yeah, 100%. And that's what we're going to see with this capital appreciation that's forecasted over the next 5-10 years. Connectivity I touched on earlier, but I think the three major points are the points below, circled in gold. 22 minutes to Reading. Reading is the starting point of the Crossrail system, that £20 billion rail infrastructure upgrade, which goes live this year. And that takes you from Reading all the way into central London, connecting you all the way through the Commuter Belt towns. And the fact that you've got access and commutability from Bracknell to Reading then puts you in access, gives you access to the Crossrail system into London and Heathrow. So that's an important thing. 24 minutes to Heathrow itself, and then obviously currently 51 minutes into Paddington Station. And the Crossrail system takes you into major stops in London, so Bond Street, etc. to take you into central London. Just a bit of a map. It shows you obviously the network systems. It shows you where Bracknell is, the Grand Exchange, and obviously it just gives you a bit of a a view of the surround. So you can see Windsor, Ascot, beautiful areas, well within connectivity, and then obviously Reading to the left of Bracknell. So again, looking at the kind of the core of our business and strategy as a developer, as I said before, we have a look at what local council's doing, we have a look at what the commercial growth is looking like in the landscape, and then obviously the leisure elements. Now, the regeneration plan in Bracknell, it's a 20-year master plan, close to £1 billion worth of regeneration committed and approved and underway. So these aren't dreams, these are actually happening on the ground, and you can see it when you go to Bracknell. If you look to the right, that is, or those are some visuals of the Lexicon Lifestyle Centre. I've been there, it is absolutely beautiful. Every brand you can think of, from a clothing to a eatery, restaurants, cafes, etc. It's got a bowling alley. So there's a lot to do. And that's close on £250 million worth of work that's been done and completed. And that's probably one of the most important factors, and you'll see now in terms of proximity to the Grand Exchange. You've got every amenity you could possibly want, not only in the development, but literally within walking distance as well.
I think a nice thing to see there is that they invested in the infrastructure in terms of the public access and walkways, etc. as well, which obviously itself to being able to walk into those areas safely, etc., etc. So it's from a regeneration perspective, besides the capital, it's also been well thought out. And I think in the next slide, you'll probably lean towards how the Grand Exchange fits nicely into that master plan over the 20-year period.
100%. Yeah, so as Scott said, if you look at the 4 blocks, top left is obviously a current aerial shot, if we can call it that, of the Lexicon Centre. That is delivered, as we've said, so that's well underway. If you look at the short term below that, you can then see our Grand Exchange icon, which is the blue arrow with a gold X through it. As you can see, that is literally a block, 2 blocks away from the Lexicon, so you've got all of those elements on your doorstep, as I said before. The midterm to the right top, you can then start seeing the almost final and kind of realized plan, local council plan, including some of the amenities and infrastructure upgrades. And then 2032, which is the fully realized plan, you can then see the Grand Exchange within that catchment. It's the only development, as we said before, that is approved by council as part of this regeneration plan, this £1 billion. And you can then see the full network of street infrastructure upgrades, highways, etc., that have taken place. So it's an exciting stage of the development of Bracknell itself, and it's an exciting time to get on board from an investor's and a landlord's perspective. You're going to see in that realized plan, and by 2032, you're going to see a massive amount of demand and appreciation on the asset with everything that's taken place around it. So looking at some of the latest pictures taken in July, you can see as much as we're selling this as an off-plan development, it is well underway. And these are some of the actual site pics. You can see construction going on, and there are no kind of envisaged delays. Obviously, there's no guarantee on that, but at this stage, we are completing end of next year, delivering Q1 2023. But there's no risk of not completing or anything to that effect, and you can see here that the site is very active at this stage. Right, so looking at the opportunity and the development itself, as you can see to the right, if you look at the visuals, this is a ultra modern development from the ground up, brand new build. All apartments are terraced, have balconies, terraces, or Juliet balconies. So you've got kind of access to the outdoors somewhat in all of the apartments. The top right-hand picture shows you the private gym, state-of-the-art gym, residents only. Then you've got the office workspace. That's a communal workspace within the development for the residents. A lot of these guys, possibly the guys that buy the one beds, as we spoke about earlier, they've got a work from home culture, and they would be able to go downstairs and obviously work from this think lab type environment. You've got the Lexicon Club, bottom right-hand picture. That is a private dining or conference room that can be booked out by residents. You've got full concierge, you've got basement parking, you've got a spa treatment room. So this really has everything to offer, almost a 5-star hotel type offering. And there's nothing like it in Bracknell or neighbouring Reading. And that's what sets it apart. And as I said before, we always design our developments based on the demand of the actual tenant on the ground in the area. And that's exactly what these guys are looking for. It's a flagship site for us, and it's probably been one of our fastest selling sites today. So looking at the configurations, obviously 1 and 2 beds available, 10% rental yields or higher rental yields coming through in Bracknell versus Reading, especially with a product like this. And looking at the different types of apartments, if you look below, the 1-bed price from around £289,000. The deposit requirements, which we'll get to at this stage, would be around 57,000, call it 58,000 pound deposit. And on a 2-bed, 360,000 pound purchase price, 20% deposit coming in at around 72,000 pounds.
Craig, just before you go on to the next slide, which I know is coming, obviously, with the reference to the cash flow summary, I think, I'd like to spend a bit of time on this next slide, and also just maybe add some of the value adds. For example, in some of the cases, some people might say, well, how can you show an 8% management fee from a services and rental management, where traditionally we're seeing 10% plus, and maybe just not now, but talk in the slide some of those finer details as to why we position that number there, etc. So yeah, I'd really like to, I'm looking forward to this next slide, and also just unpacking the detail as well. Thanks.
Brilliant. All right, so using a 1-bed as an example, 299,000 price point, and I'll run through the blocks kind of step by step. So in terms of the transactional process and the costs associated, from a reservation perspective, so once we've chosen your apartment, you then sign a reservation form, submit that along with your ID or passport, and you pay a £2,500 reservation fee. That allows us to take it off the global stock listing, and we then go through the process, which I'll get to, around exchanging contracts and all of those good things. But working on an assumption of a 75% mortgage, if the client is going with the mortgage, interest only, which is very common in the UK, specifically for investors in the buy-to-let space. So 75% mortgage, so the loan amount would be £224,000. The interest rate around 3.5%, which we're currently securing for clients. That would be the monthly mortgage repayment, $656. And that's kind of a breakdown of the finance summary. Looking at the reservation and exchange costs. So what that means is, this is what an investor would need over the next, call it, month, to exchange contracts, fully secure the apartment. So as I said before, on day that we secure the apartment, it's £2,500 reservation fee. Legal fees would come in at around £1,350. Exchange deposit of 20% minus the 2.5 already paid would bring you to 61,340. So within, call it, the next month from securing your apartment, you would need to have £61,340 available to put into the investment.
Craig, and just before you move on, obviously that's over the, call it, a monthly period, as you alluded to. I think just in terms of the rest of the capital that's going to be employed into the rest of it, just maybe talk through the when those amounts become due, over what period, as you're talking per line item.
100%. Okay, so that is the immediate, call it over the next month, as we said now. Then looking at the purchase costs on completion. So this would now, if I need to put a date on it, this would be due and it needs to be available, call it the end of next year, Q1 2023. So there would be, if we got a 75% mortgage, there would be a residual deposit amount due on completion of around £14,000 for this specific example. The mortgage fees, the furniture costs, and land registration come to about £8,000. Then you've got stamp duty, land tax, which is a transactional cost paid to the government in the UK of around, call it £20,000. SDLT, stamp duty, land tax, if you want to localize or use a local comparison, it's almost like transfer fees when you purchase a property locally. So the total cash required on completion would be a further 42,261. And that's only due the end of next year. So that would be due within a month, call it. And this balance would be due end of next year, Q1 2023, apologies. So the total cash employed for an investor in this specific apartment would be £103,601. And that's over the next, call it 18 months.
Okay, and then obviously, then you just bring in the loan to top up the total costs included of the mortgage.
Correct, correct. Now, if I can take that figure there, the 103,000, which is the investment, the cash investment. If you have a look here, there's a 5-year, 10-year, and then 15-year investment projection. And this is showing the cash employed of 103,000. Okay. So if I map it out now and I look at a 5-year investment case for the client, the return on capital employed being the 103,000, would be 67% over 5 years. If you annualize that, it's 13% per annum. And I'll give you the contents of that now. If you look at a 10-year investment case, 156% return on capital employed and a 16% annualized. And then obviously from a long view investment view perspective, which this product really is a long-term investment. If you look at a 15-year investment case, you're looking at 481% return on capital employed, and obviously annualized is 32%. So you can see if you take in the holistic investment, the capital appreciation, the rental income, your net position over 5, 10, and 15 years is very positive. That's a very strong investment case. Now, how we get to those figures, just to backtrack a bit. So looking at the profit and loss. We're working with a projected gross rental income of, call it 1,250 per month. That's a 5% rental yield, projected gross. As we said earlier when we started off, Bracknell and areas like Bracknell with these types of products generally coming in higher, but we're going conservatively so that it's a realistic view for the investors. So that would be your income. Service charge and ground rent, you could liken that to levies locally, would be 157 cost for the investor, for the landlord per month. Letting management fees, 8%. That's discounted based on the scale of our business, which I'll get to later, but that's £100 a month. So your net income after those costs is sitting at £993 per month. Take off your mortgage repayments, you're sitting in a cash positive position of £336 per month. So that figure there, plus your cap appreciation, obviously generates your income, your total return, and then it calculates the investment case based on that. So just to kind of give an idea of how we get to those figures. As I said before, the capital appreciation and the rental yields are very realistic, very achievable, conservative figures.
Okay, so yeah, I think obviously just for the record and for anybody else that's wanting to ask any questions, you're welcome to ask any questions at this point. But just this is obviously a cash illustration for a 1-bedroom unit based on just under £300,000. Obviously, part of our offering is to look at depending on your needs and your requirements, and if this product is something that you're interested in. And you want a 2-bedroom, we can obviously then completely rejig the cash flow illustration to suit your needs and requirements, as an example. And if this is something is a little bit too much for you, we've obviously got other products that we can look at and position with you in a separate meeting with Craig, etc. But I think this will give you an understanding of what it takes to get in and how much you're putting in. And what the opportunity and the investment case sits at. I think this for me is obviously really where it's putting the meat on the bone with reference to understanding why UK and why Bracknell, and then we look at the numbers here as to the detail and the devil in the detail that sits behind all of this. So thanks for that. And then just what you know, obviously we know why. We've obviously done our due diligence and we've looked at you know, partnering with SevenCapital, can you just tell us a little bit more about you know, position SevenCapital and from our perspective why we partnered with you?
Yeah, of course. Okay, so just having a look at the group as a whole. There's obviously the various divisions and businesses within the group, but most importantly is Colmore Tang Construction. So as you can see there, we own our own construction firm. What this does and means for an investor and a partner alike is the fact that obviously the buck stops with us. We're not an agent or a third party. And this allows us, the fact that we own our own construction firm, to manage not only the build quality and deliver a superior product on the back end, but equally importantly is the construction timelines. You know, you don't want something putting 20% down or client putting 20% down and then waiting and there's delays, etc., etc. And you don't want them obviously getting to the end result and not having a product that is on point. So that's probably the most important element there. Holistically looking at SevenCapital, we're a £6 billion company. So there's a lot of weight, a lot of stability as a partner, both for yourselves and for your clients. And it's all about track record, which we'll get to now. So just looking at the buy-to-let or the investment side of the business, we've delivered in total over £2 billion worth of property, 130 dedicated property professionals across our global offices. It's now surpassed 8 million square feet portfolio delivered, and over 6,500 residential units to date. So again, from a track record perspective, it's a very important thing for anybody to look at, obviously, especially investing, call it blind, remotely from South Africa. You want to make sure that you've got the right partner, and you want to make sure that they have delivered consistently over many, many years. Just some visuals in terms of, and I suppose the importance of the slide is just pointing out the design elements of some of our completed projects. Always state of the art, as we said before, always built with the tenant profile in mind, and speaking into that specific audience. So again, touching on the track record, to date, 28 developments completed, close to £1 billion worth. These really are just names and numbers, but the importance of this slide is, as I said, the track record. Every development that we've started with or set out to complete, we have, so 100% track record, and that is probably the most important thing when you're looking for a partner over in the UK from South Africa. Currently under construction, again, just names and numbers really, but I think the takeaway from this slide is the fact that the majority of our clients globally are portfolio clients. What that means is they do partner with us, and they will purchase more than one property over time and build a portfolio with us. And the takeaway from the slide is the fact that we are a big developer, and we've always got new developments and exciting opportunities coming through, and that allows our clients to continually build on their portfolio with SevenCapital. Investing with SevenCapital, so essentially, and I'll get to the later slide, we've tailored or designed the business as a turnkey investment solution for our clients. So we hold our clients' hands through the entire process, from reservation, as we said before, to exchanging contracts, completing the development in-house through our construction firm, and handing over to our clients. And then the aftercare, probably most importantly, which I'll touch on. Aftercare being obviously the maintenance, the taking care of the apartment and the client's portfolio, and obviously making sure that it is successfully let and generating an income for our investors. So, as I said before, we've structured the business as a turnkey solution for our clients. Very proud of the kind of the block below in grey. Every year, With our focus on customer service, we win global awards, local awards in the UK. We were proud of that fact, and it's because of this approach that we've taken. So just to kind of map it out, so obviously as a developer, we build our own developments, and that's essentially where we make our money. We've got our back-end or customer-centric services, and that's comprised of a panel of solicitors that you can choose from in the UK. They'll assist you with the transactional side of things, get you to exchange contracts, and advise you every step of the way, making sure that your interests are looked after and that you're covered. Then we've got Visionary Finance, our mortgage origination partners in the UK. They're the strongest in the market in the buy-to-let space. So it's not necessarily just a cash investment. As we saw earlier with the investment case summary, we can raise a mortgage for our clients. Typically at the moment, anything from, call it 50, 60% up to 75% mortgage, and rates hovering between 3 and 4% at this stage for SA investors. Then we've got our furnishings department in-house. So once it's complete, we can fully furnish the apartment for our clients. And then probably most importantly on these customer-centric services, these additional services, are our partner letting agents. So once it's complete, we furnish it for our clients, and then our partner letting agents take it to market, find the tenant, vet that tenant, put the lease in place, and then manage it for our clients ongoing. So it's as hands-off as you could possibly want and need as an offshore investor looking into the UK. Now, just to touch on all of those additional services other than the build, because of the scale of our business as well, what we've done is we've secured really good rates and pricing on everything from the solicitors to the mortgage origination, to the furnishings and the letting agents, and we've passed those discounts and better rates onto our clients. So that's quite a saving when you look at the holistic view. Just in terms of our global reach and offices, I think the takeaway from this slide, if you agree, Scott, is the fact that we've got an office locally in South Africa, and that allows us to deal directly with our clients locally in Southern Africa as a whole. But you've got a point person and you've got a team on the ground this side to look after you every step of the way.
Yeah, thanks very much, Craig. That was a great presentation, and really does distill the complete offering from UK right down to the Grand Exchange development and everything behind it, including your track record. So thanks for that. I think we're obviously going to open up the Q&A, so if anyone's got any questions, they're welcome to put them into the chat room, and we can match them. One or two things that have sort of come up during, or questions that have come up during and I did allude to it initially when I first sort of introduced everyone. You know, from a South African perspective, and obviously depending on whether you're all from South Africa that are on this call, or a few of you that aren't. But as an example, you could potentially compare your local country or jurisdiction where you are currently dialing in from. But you know, as a South African, what is the, you know, from your perspective, how would you compare this to the product that we've got on the table here right now versus sort of the local landscape within South Africa at the moment?
Yeah, Scott, I mean, from a personal perspective, and I think everyone has their own take on it, but just generally, I think we can all agree that we're quite fortunate in South Africa in terms of the amount of space we have for development. There aren't many restrictions as far as kind of protected green belt, etc., etc. And what that leads to is an abundance of stock. There's a massive amount of residential development ongoing in South Africa all the time across all provinces. So there's an abundance of stock. If you're looking to purchase and build a portfolio locally with rental stock, you can pick and choose. And the same is said for tenants. And I think more and more clients with exposure in the local property market are looking to diversify, both from a risk perspective as far as having a heavy portfolio locally in property and associated risks to that, but also looking from a currency hedge perspective or currency security perspective. Going into a market like the UK, hedging the rand, obviously you're always going to see growth on the pound. And we're dealing with almost a more mature or robust legal system in the UK. So the landlords are in my opinion, better looked after, or a lot more looked after and taken care of in the UK versus some of the pitfalls that we experience in our local markets with rental properties. Robust legal system, and obviously, you know, the pound-based income and capital appreciation. And as I said earlier in the presentation, there's a massive housing shortage in the UK. So you can only see increased demand, whereas there's an abundance of stock locally in South Africa.
Great. Okay, so I think just sort of for anyone wanting to that might be interested, you know, in this particular development or any of the others, in terms of next steps, what's the best way for them to move forward?
Yeah, so it's really a case of touching base. I think post the webinar, we'll be sending out a catch-up email, the recording of the webinar. Obviously, we've got your details on the screen as well now. It's really a case, guys, of reaching out, making contact with Scott and his team, and we can go from there in terms of setting up a meeting, setting up a Zoom meeting, and then understanding your investment objectives. At the end of the day, we don't just want to sell you an apartment. We want to make sure that the investment as a whole suits your investment plan and that it ticks all the boxes. So it's really a case of getting an understanding from the client what they're looking to achieve, and then marrying the right product to that and structuring it correctly to achieve those goals.
Yeah, I think that's a very vital point, because you know, obviously looking at you know, working with SevenCapital as an example, you've done, you know, 28 developments to the tune of £750 million. You know, by the time you finish your next 6, you'll be at around 1.2 and delivering over 7,000 apartments. I certainly, you know, the benefit of working with the likes of yourselves, and for an investor's perspective, is that, as you alluded to earlier, is that number one is understanding what your objectives are, how you want to position yourself offshore from a property perspective, and then more importantly is that with dealing with Carrick Property and the seasoned developer, it allows you to grow your portfolio, because there will always be more developments in the pipeline. And obviously that once you're comfortable with that product and the provider, it puts us in a better position to help you grow your portfolio dependent on your objectives and us listening to what your requirements are. I think that's the key message from me as well. So thank you very much, Craig. Thanks to SevenCapital as well, and thank you to all of you that are on this call. My details are below. We will be sending out the recording, as Craig mentioned, and thank you very much for your time, and have a great day further.
Thanks, Scott. Thank you, everyone. Have a good day. Bye.
Bye.